And so what we're seeing in the market is the market hasn't caught up with what the hell is going on. And certainly I can see oil prices going quite a bit higher. I mean, if you look at oil prices in the Asian countries, typically instead of, $100 a barrel, or now $110, typically they're 150, 160. Now, admittedly, this is local shortages, but you can see which way this is going. Our prices haven't caught up with the reality of it yet, even without an American failure on its invasion. Boots on the ground, loss of life, body bags coming back, the whole caboodle. This is not good. It really is not. The Brussels contingent, the leaders, if you like, in Europe, is the Chihuahuas. They're just, they're not people of stature. They really are not. We are very, very weakly governed, and there is absolutely no sign of any preparation for dealing with this sort of disaster on the national level. I wouldn't rule that out. I wouldn't rule that out because nobody's challenging anything in these markets. You can move things how you want, in a sense. Because, we're all too frightened to deal. Are we going to deal ahead of the weekend? I don't think we do. But my goodness, this is manna for heaven for stackers. It really is. They'll never see it this cheap again. Yeah, well, since President Trump made his presidential statement last night, I think it's become quite clear that there's going to be some action this weekend, talking about troops being activated, if you like, in an invasion, whatever that is, of Iran. And of course, we've got Good Friday, Saturday and Sunday, if not to conquer Iran or whatever, but, perhaps to make sufficient progress to give markets comfort when they reopen on Monday. Now, we're actually closed on Monday here. Easter Monday is a bank holiday. So the London markets will be out of action in effect. So I suppose that from President Trump's point of view, this is probably the best chance he's got, if you like, of doing something. Now, I mean, obviously, I think it's the speculation around this which must be driving oil values, because it's odd, Danny, because markets just don't know what to make of this. They really don't. I mean, with the way in which Iran seems to continue to shell US bases all around the Gulf, the fact that the Houthis are now coming into play in the entrance to the Red Sea, blocking off effectively shipping going through the Suez Canal, and also blocking the pipeline at Yanbu, which delivers, I understand, something around about 1 million barrels a day. This is actually quite serious stuff, and yet markets are sort of rather ignoring it. The fact that oil has jumped today, I think, does show some nervousness, but this isn't being reflected in bonds or indeed in equities. They're just sort of quiet. I don't think anybody knows what the hell's going on. That's the real problem. But this is actually very serious, Danny, and all the reports that I see suggest that Iran is not going to be a walkover. They have been defending themselves. They have been planning, if you like, to deal with an invasion for the last 40 years. Ever since ever since Saddam Hussein was chucked out in Iraq, which is 2002 or thereabouts, they've seen what happens when America, if you like, conquers a Middle Eastern state, and it just completely destroyed everything. And they're not going to fall for that at all. They're determined, absolutely determined that is not going to happen to them. So they have evolved their missile technology so that they have now got hypersonic missiles, which, I'm told travel at up to sort of 15 to 20 times the speed of sound. This is unstoppable. And basically, they've taken out all the, almost all the interceptors, of which, because of the the situation in Ukraine. I mean, the Israelis and the Americans are low on this sort of stuff. So having taken all that out, we can now expect to see the hypersonics and all the rest of it really coming into action. So I would say that this is a very, very dangerous time, and I would not put my money on America actually managing to win this one. I think, if anything, America will be beaten. That is extremely worrying because it will change the geopolitical landscape completely. And as for the price of oil, I mean, we're now seeing people saying, well, it could go to $200, whatever. I mean, I don't know where it's going to go. It'll obviously go higher. You could say that there is plenty of oil around and that, okay, with a little bit of rationing here and there or whatever, it may not be quite so bad. But having said that, I think the real problem isn't so much oil. I mean, that is a problem, but also it's the stuff which comes out of, from downstream, from the refineries, fertilizers, urea, sulfates, phosphates, and all the rest of it. And this at the beginning of the growing season in the Northern Hemisphere. And with the Houthis closing off the Red Sea, it means this stuff isn't going to get to Europe. This is going to be serious inflation problems, inflation of prices later on this year. Really serious. And nobody in Europe has planned for this. Nobody has any resilience against this development. And so we're just open to be literally slaughtered in this. The idea that inflation is going to be, I mean, I saw the IMF report the other day, and they reckoned that, assuming that this, that Hormuz wasn't closed for too long, they expected inflation to peak in the United States at around about 4%. And furthermore, core inflation would go out at the end of the year at about 3%, and there would be one more cut in interest rates. Come on, no way. And so what we're seeing in the market is the market hasn't caught up with what the hell is going on. And certainly I can see oil prices going quite a bit higher. I mean, if you look at oil prices in the Asian countries, typically instead of, $100 a barrel, or now $110, typically they're $150, $160. Now, admittedly, this is local shortages, but you can see which way this is going. Our prices haven't caught up with the reality of it yet, even without an American failure on its invasion. Boots on the ground, loss of life, body bags coming back, the whole caboodle. This is not good. It really is not. Well, one point worth making is that when we had that drop post-COVID, oil spiked up at $128, $130. So, we're not even there yet. I mean, that's on 10%. We're certainly seeing 20% and probably more. And it's not good. It really is not. This is. I mean, it's going to. In America, of course, everybody talks about gas prices, which to us are, as petrol prices. And so coming up into the the midterms, this is not a happy scene for President Trump either. I think he's almost throwing all the chips on one bet, and that is this weekend is going to turn the tide. I don't believe it. I don't believe it.
And again, you mentioned it's a 3-day weekend, so they've got an additional day to act.
They've got an additional day to act, and with European markets closed for a 4th day, or certainly we are, I'm not too sure about the continent, then, I mean, it's probably his only chance to do it. But he's fighting, I think, virtually impossible odds. I mean, the problem is that the American military are still fighting World War II, with all the aircraft carriers and all the rest of it. I mean, all they are just huge fake targets for missiles, for hypersonic missiles. Which is why they're standing off, theoretically out of range. But it was interesting to see. And I think this was a deliberate ploy. The Iranians sent 2 missiles over to Diego Garcia, which is sort of 2,000 miles away or something. I mean, huge distance. I don't think the intention was necessarily to hit Diego Garcia. I think the intention was to say, look, we can get you, if you like. It was a warning. Well, I mean, you would think that governments have a plan. There's no sign of it. There really is not. They're all actually, I think, panicking. I mean, today we had our foreign secretary, who's a typical Labour MP. I mean, I wouldn't comment on her qualifications for the job, but she was hosting an online meeting of 40-odd countries to discuss this. I mean, all they're doing is they're having meetings. Nothing's coming out of it. There's no action. There's no action plan. Why don't we go and talk to someone? It seems to be about as far as the planning goes. And of course, nothing comes out of that. It's just a waste of time. And things are accelerating really quite rapidly. I mean, the idea that you can selectively ration energy, how are you going to do that? You can't do that. How are you going to identify the people who can't afford energy and need help? You can't do that. What's going to happen, Danny, is that they are going to print credit in huge, great quantities, basically to defray the problems that this Gulf episode is giving us. I mean, and also, the political class, I mean, they're saying one thing about this, which basically is, it's not our war. We will give you facilities. I mean, in the case of Britain, we will give you facilities to fly your bombers from our airfields and also our airfield in Cyprus for defensive purposes. I mean, honestly, what a load of rubbish. So, I think our intelligence services are saying, and our military are saying, look, this is bad. This is very, very bad. Don't get involved. And so we have the situation where Starmer is determined not to get involved, but is actually not doing it as well as previous MPs, prime ministers. I refer back to Harold Macmillan in the late 50s. America wanted us to join in on Vietnam. We refused. Before that, we wanted America to join in with us on Suez. America refused. It's perfectly respectable for allies to decide not to get involved in someone else's war. Just bloody well say it. You don't need to sort of, go, whoa, I'm not too sure about this. We'll do this. We'll do that. I mean, they are ditherers, absolute ditherers. And as for the European lot, I mean, Pepe Escobar, who is a very well-informed geopolitical analyst based in Asia, calls the Brussels contingent, the leaders, if you like, in Europe, as the Chihuahuas. They're just they're not people of stature. They really are not. We are very, very weakly governed, and there is absolutely no sign of any preparation for dealing with this sort of disaster on the national level. It will eventually. I would draw a parallel with the great financial crisis when gold fell quite rapidly from over $1,000 down to 680. And then it climbed up and tripled from there between then and the following September. No, not following September, September 2011. So, I mean, basically, I think what happens, I mean, we have an economic system which is basically run by neo-Keynesians. They don't understand gold. They don't like gold. They think gold is a pet rock. It is the gold standard is a sort of, if you like, a relic from the past. They don't see that gold is part of the monetary system. They think it's just a hangover. Now, when you've got investment managers who have all gone to university or certainly high school and learned that form of economics, you can understand why their reaction under circumstances like this is to see gold as something you take profits in. And your idea of zero risk is cash in your accounting currency. And that basically is what everybody's been doing. They're saying, oh, gosh, terrible risk. No, if you're a US fund manager, what do? You sell things for cash. And if you're a foreigner, you sell things for cash in your own currency. It's a process which actually is only just starting, certainly as far as the dollar is concerned, which is over-owned abroad. I mean, and you've got an awful lot of dollars are owned by Middle Eastern nations. I mean, I'm thinking Saudi Arabia, the United Arab Emirates, and also Kuwait. I mean, these are if you look at the ownership of financial assets, those are the three big ones in the area. Now, do they sell gold in order to pay the bills, or do they sell dollars to pay the bills? I mean, people think they sell gold, but they don't. They sell dollars. Of course they do. And of course, this Keynesian approach doesn't apply to Asia, because they've never read they've either never read an economics textbook, or else they go on their own gut feelings, and that is, get rid of this rubbish paper. So you can see that these are the circumstances that are prompting massive flows. Almost, I'm just draining liquidity of physical metal out of our exchanges going into China. And the shortage in China is so acute that the big banks are rationing their customers when it comes to investment bars. They're saying, we have so much available on this day, and by 1 minute past 9, it's all gone, just gone. There's another, I think it was the China Construction Bank, is now holding a sort of a lottery for its customers who want to invest in gold. You have in China, you have got savings accumulating at the rate of $5 to $6 trillion every year. It's not going into property. It's not going into the stock market. A little bit of it maybe is. The People's Bank of China has been lowering its reference rates so that deposit rates, if you like, on bank deposits have been going down. These banks always offer gold accumulation accounts. You just open a gold accumulation account and you buy gold. Why do you buy it? You buy it because it's going up. You buy it because you're frightened of what's going on. You buy it to get out of to hedge, if you like, the whole of the currency system, because gold is your only hedge. You're not allowed to deal in foreign currencies in China. There is an exchange control regime. There is an exchange control regime also in India. Same thing applies, though. There are less arrangements, if you like, for Indians to buy gold and silver. But nonetheless, I mean, we're being cleaned out, and that's the effect. I mean, the other thing about it, Danny, is that we've just had the March expiry on COMEX, and the swaps and the bullion bank traders and all the rest of it are net short, and they're trying desperately to try and reduce that liability because they can see what's going on. They may not be the brains of America or Britain, if you like, in terms of understanding the difference between money and credit. But when you get the major banks in America virtually all saying they expect gold to be higher at the end of 2026, and in some cases, significantly higher by the end of the year, bear in mind that their managed accounts, which in some cases are over $1 trillion, have got no gold in them at all. There is a huge mismatch in the whole thing. So, if you're running the trading desk and you understand the position, if you like, from your investment managers, that they haven't got any gold whatsoever, and you see that, for example, the petrodollar is now dead and buried because anything coming out of the Middle East basically now has to go into petro yuan. You may not analyze this terribly carefully, but your gut tells you don't be short of gold. So what do? You bang the price in order to scare everybody else out so that you can buy it. Unfortunately, there is very, very little speculative interest in silver. Open interest is the lowest it's been for over 20 years. The level of speculative interest in gold is equally very low, where I think I'm right in saying that the level of open interest is as low as it's been since about 2014-15. So, again, the speculators are basically not there. If it's going to go any lower, then you've got to persuade punters to go and short it so that you can close your bear position. I wouldn't rule that out. Because nobody's challenging anything in these markets. You can move things how you want, in a sense, because, we're all too frightened to deal. Are we going to deal ahead of the weekend? I don't think we do. But my goodness, this is manna for heaven for stackers. It really is. They'll never see it this cheap again.